Hello everyone, good evening. This is Komal Tyagi from Team Taxmann, welcoming you all to today's live webinar on customs rate changes in Budget 2022 and classification disputes on automobile and railway parts. I would like to start with a brief about Taxmann. We are the leading publisher of tax and corporate laws in India. We maintain the largest and the most accurate online database on income tax, international taxation, GST, company and SEBI law, IBC, FEMA banking and NBFC, competition law, accounts and audit, and Indian acts and rules. Over the years, we have worked strenuously to offer the solutions that will continue to help you grow your practice. Our 6 decades of experience in the domain has helped us to constantly innovate and enhance our services to take the tax practice to a newer height. We have also developed the national website of the Income Tax Department, and we maintain it with the help of our technical team and the editorial. Now, I welcome our learned speaker for the evening, Mr. Deepak Suneja, partner, NITYA Tax Associates. Mr. Suneja has experience of over 9 years in advising clients on complex indirect tax issues, structuring business models, and planning supply chain in the field of indirect taxes. Deepak's expertise includes laws relating to GST, excise duty, service tax, customs duty, and FTP, etc. This is our pleasure to have you with us, sir. Before we proceed, I have to share a few tips for the participants. Number 1, your mic will be on mute. However, you may post your questions in the chat box given on your right-hand side. Your questions will be answered by the speaker during this session or after the session by the R&D team. A copy of the presentation on the subject matter shall be sent to you in email for your future references. Now, without taking much time, I request Mr. Suneja to address the audience and proceed. Over to you, sir. Thank you.
Thank you. Thank you. Firstly, I'd like to thank the Taxmann team for giving this opportunity. This indeed is a very interesting topic, the custom rate changes which have come in this budget and the classification disputes. So presently, I'll start with the changes proposals which have come in budget 2022. And if you see the idea in this budget when it comes to customs, there has actually been a gradual shift starting from budget 2021. So if you see in the budget speech, our Honorable FM mentioned that there will be a comprehensive review of the existing custom duty exemptions in near future. She had a target date till September. With that, there was an imposition of a new cess AIDC, which and BCD was reduced to the same extent. The BCD was also increased on several items. In addition to that, there was a schedule which amended more than 350 custom tariff entries, and it was given in effect from 1st January 2022. So custom tariff was in January 22 aligned with WCO. So this was one part of the changes, which was, I'll say, a realignment of the custom duty structure. Now in budget 2022, there have been an increase in several BCD of machineries. So there's a gradual, I'll say, phasing out of exemptions which is there on machinery. And in the speech, our FM mentioned that it is to promote domestic manufacturing industry. There is realignment of the entire custom tariff. So again, somewhere around 300 items have been realigned, which were earlier in exemptions, and now the tariff is being changed to that. So from 1st May 2022, the tariff would again change and the corresponding exemptions would get removed. And on several other items, their BCD have been increased with very minimal additional exemptions which have been provided to the industry. So in this presentation, I'll be covering some of the presentations or I'll say some of the rate changes which have come, which might be relevant to the industry at large. Also, this also summarizes that in the past 2 years, because of so many changes, there is a need for the industry to re-examine the exemption, so as to ensure that no incorrect rate is being taken by them, and side by side also tariff entry which is being used by them is correct, because there might have been a change in the tariff entry being used by the industry. Therefore, that should be reanalyzed in that context. Moving forward, the first important, I'll say, amendment in this budget was vis-a-vis project imports. And this is one of the very popular benefit which was availed by industry for setting up new projects. So if let us say there was a project report was formed and there was a concessional rate of, I'll say for some it was nil, 2.5%, 5%. So what they have decided is that BCD under this scheme would be brought to 7.5% in a phased manner. How would they would get affected? For any projects registered till September of this year, that is September 22, and for which imports are made till next September, the existing duty rate would continue. So if the existing duty rate, let us say there was some exemptions for coal, electricity projects, etc., 0, 2.5%, 5%, that would continue. Any projects which are registered after September 22, for imports, the rate would be 7.5%. And after September 23, actually, effectively, all the rates would be 7.5%. So from October 2023, you have two options. One option is that you might be registering the, just one second. Yeah. One option is you might be registering the product till 2022. If you have done that and you have made the imports till 2023, sorry, if you have registered the project afterwards, then all the imports would be at 7.5%. Even if you have registered the project before September, even after, in that case, after October 23, the rate would be 7.5% only. So this, why it is important is that if you see most of the capital goods are still even presently being taxable at 7.5% only. So you can see many industries leaving this project import benefit and moving on to an itemized rate, wherein some goods might even attract a lower benefit, or otherwise also this hassle of getting the project registered, all the other compliances they might do away with. Moving forward to the clarification which they have given on SWS exemption in this budget. So a circular has been issued in this budget saying that SW would be exempt where custom duty is exempt. In short, they have clarified that since SWS, with social welfare surcharge, is levied as a percentage of BCD, whatever the rate of BCD is, if it is 5, the SWS would be calculated accordingly. 10% of 5, that is 0.5. If it is 0, SWS would also be 0. And this is actually in line with excise and service tax circulars which were issued for ECHSCC, clarifying the same point. Why this is important and interesting is that this actually circular is contrary to the Supreme Court decision of Unicorn Industries, which was a Supreme Court larger bench, which said that cesses needs to be payable even if BCD or excise duty is exempt. In that case, the discussion was vis-a-vis excise duty, but the same concept can actually be borrowed to BCD. And there is a huge line of jurisprudence stating that even if, let us say, a circular is issued which is contrary to the law, contrary to the judgment, that would not hold water. So the validity of this circular is in doubt. And interestingly, the department before this circular has started raising dispute on advance authorization exemptions, safety exemptions, some explained product side, healthcare, etc. So one thing is that after this circular, department may not raise disputes. But yes, if let us say department does raise dispute because of Unicorn, the dispute would be valid and SWS is technically not exempt. In fact, what they should have done is instead of a circular, they should have brought an exemption notification stating the same point or clarifying this as us. One more interesting controversy that would happen after this circular is that what would happen to SWS where BCD is paid through scripts. So let me just take a minute and explain what happens in these cases. So when you are paying BCD and by debiting it to MEIS or ACI scripts presently, it is not that there is only a debit in scripts. There is a corresponding exemption which is made available by the exemption notifications issued under customs, and BCD is made 0 to that extent. So if BCD is 0, we discussed SWS is 0. However, there is an earlier corresponding circular or a judgment in the case of Gemini, which states that in case of scripts, even though BCD is 0, SWS would still be payable. So whether this circular now would have an impact on that, whether taxpayers can claim that exemption, whether they should file a refund of whatever SWS pay in this regard or not, would need to be seen now. And these disputes you can expect to come in future. Now, moving forward to what the proposals are, the actual proposals. We discussed them very at a macro level in the first slide. Now discussing what the actual proposals are. The maximum proposals are towards textile, leather and handloom industry, wherein it can be categorized in three parts. The first part for any apparel and clothing accessories, knitted and crossed fabrics, etc. Earlier, the duty rates were ad valorem and a fixed rate. Now, those have been amended to provide only an ad valorem rates. Further, there is a corresponding exemption withdrawal for SWS on these products. Secondly, and importantly, for several items of these industry, there was an exemption of BCD on imports under the Mega Custom Exemption Notification, that is 50/2017. So in several entries, there was a list of machinery which was given under that. Now, multiple of these entries have been provided that they will be withdrawn from 1st April 22 or 1st April 23. Another important exemption which has been provided, this is an additional exemption which has been provided, is for handicraft items. Let us say if you are exporting an handicraft item, they are provided an exemption of decorative paper, photo frames, etc. For exporter of footwear and other leather products, they have provided exemption of button, buckle, locks. And for garments exporter, they have provided exemption of lining, interlining material, inlay cards, etc. So in addition to that, what they have also done is they have rejiggled a lot with the exemption notifications and proposed an amendment in the custom tariff. So yes, there are a lot of changes vis-a-vis this industry, which they need to see whether for capital goods, whether for, let us say, FG, what they're importing, whether there's a duty rate change in that or not. Moving forward in this regard, vis-a-vis the iron and steel industry, there are two changes which they have done. So if you must have seen, the industry is booming and there's a lot of, I'll say, domestic manufacturing happening. So what they did was, firstly, they said that the scrap of iron and steel, that was provided in concessional rate of 2.5%. That concessional rate has been extended for one more year to 1st April 2023. Secondly, anti-dumping duty levied on these products, be it bars, rods, high-speed steel, or let us say flat roll products of steel being imported from these countries, that has been withdrawn. And the reasoning given was that because of the prices of steel have been rising so much, therefore they are proposing to withdraw these anti-dumping duty. So in hope that the prices come down. For drugs and pharmaceuticals, there have been a lot of amendments, and what they have proposed is that they have reduced exemptions, or let us say which were attracting partial rate of 5%, that also has been withdrawn. So you can expect an increase in BCD for drugs, medicines, I'll say the active ingredients of these drugs and medicines, that attracting higher rate. For rare drugs and rare diseases, if they're being imported by a center of excellence and they're provided 8 lists, which includes hospitalized aims, etc., for specific drugs and medicines which are used, and these are usually very high value drugs, so they have provided an exemption to that regard. And there have been a lot of hype in the social media recently. So you see one or the other campaign, the medicine of drug being very high. So recently granted an IGST exemption for some drugs. Now they have extended that to some BCD exemptions also when they are imported by these specific institutions. Moving forward, there has been some tax rate changes on electronic gadgets. So if you see the parts of smartwatch, hearing devices, smart meters, they will be increased in phased manner. And the idea is that the domestic industry starts manufacturing these parts in-house. So they're saying presently most of these companies, they assemble it in India. Now they're promoting that whatever parts you're assembling in India, you import the raw material of those parts and then you start manufacturing parts in India. And a similar practice was actually followed by the ministry for your TVs, for phones, etc. That slowly and steadily they are stating, or they are emphasizing that the parts should also be manufactured in India, and India does not remain to be only an assembly center for that matter. The second is that camera lens which is used. So the module for the camera lens, they have been reduced, and the idea is that the camera lens, basically the final product, that is also manufactured in India. So that's the idea in this. Secondly, for solar panels, again, this was one of the anticipated increase in duty rates which was there. So in this, if you see the photovoltaic cells, which are one of the most important part of solar panels, if they are coming in unassembled form, the BCD is being increased to 25% from 1st April 22. If they're coming in assembled form, the duty is increased to 40%. In this, one point is important, that presently India does not have that manufacturing, I'll say, so much manufacturing capability to manufacture these parts. So most of the solar panel industry or solar manufacturers depend upon these imports. So in that context, increase in this PCD would hurt the end customer or the solar power companies, and the price of this electricity generated through that might increase. In the electronic vehicle sector, they have actually provided an exemption, and not provided, for that matter, they have substituted the entry. So exemption was also there, that if, let us say, individual component in kits are not in disassembled form, but you are actually importing EV in disassembled form, there were a graded structure for imports. That is continued, and there is only a language change in this regard. Now, one very important part. So this was mainly what they have brought in, the exemptions in this respect. One very important part here is sunset for conditional exemption. So just to share with you, those of you who might be knowing and following the budget, in last budget, there was a provision which got inserted, section 25(4)(a), which stated that every conditional exemption shall be valid till 31st March after end of 2 years. So notifications can basically be of two types. One would be an unconditional notification. There's an exemption, no condition attached to it. But most of the conditions, if you see presently, are conditional notifications. So if you see mega exemption notification, you will get multiple entries where there's a condition attached. EPCG, advanced authorization, if you see all these FT notifications, there's a condition attached. And many more notifications are there which are conditional in nature. Like even these FTA notifications, there's a condition that you have to get a country of origin certificate. Only then can you get this exemption. So all these in that context are conditional notifications. Now, the budget also mentioned that whatever were applicable till 28th March 2021, they'll remain valid till 31st March 2023. Now, in this budget, what they have done is that in the mega exemption notification 50/2017, they have prescribed a validity till 31st March 2023 and 24 for different goods. So if, let us say, you have 100 entries, for 40 they have said till 31st March 23, 60 they have said till 31st March 24. So they have done that for mega exemption notification. Then they have also, for very specific notifications, they have introduced this date. But one important question which is open is that what would happen to other conditional notifications? Whether they will expire automatically on 31st March, whether they will be bringing some whether they'll be bringing some extension to tax regard or not, that is something which I'll say is open-ended in that context. So this is something which needs to be followed in specifically in the next budget. So these were the ideas, or I'll say issues, which are regarding budget 2022 vis-a-vis the custom side. Now I'll be moving to the second, again, very interesting topic of classification dispute in automobile and railway part industry. And so firstly, I'll try to highlight why these disputes are there. So what is the reason of those disputes, why these disputes are coming? Just 1 second. Yeah, thank you. So firstly, let us say the classification disputes for automobile parts or railway parts is there. So right now, quite frankly, even for tractor parts, some of these disputes are coming. So first question is why? Why is this dispute coming? And the reason is the rate arbitrage between your parts of automobiles or motor vehicles, let us say, which are under 8708, 8714, or vis-a-vis railways, it comes to 8607. So if you see in these parts, the BCD rate and GST rate is 15% and 28%. But if you see other headings, the BCD rate is actually 7.5% to 10%, and GST rate is 18%. So what you can see or what you can expect here is that if, let us say, any of an importer or manufacturer of specific parts, So let us say there is a manufacturer of relay who is proposing that his part should be classified under Chapter 85. Or let us say there is an ECU who's saying the part should be classified under Chapter 90. And such other similar parts. The department might always say that no, this should be classified under 8708, and you pay me, let us say, for imports higher BCD, or for domestic supplies higher GST. Vis-a-vis, the assessee might be willing to claim a lower duty rate in this regard. And that is why the genesis of these disputes has happened. And why these disputes were not coming earlier was, earlier the excise duty rates was actually not that different. It was very close, for at least I'll say for railway parts it was lower. But if you see most of the parts for automobile parts and for other parts, either BCD rate or otherwise, that was similar only. And that is why these disputes have come. Now, one important impact of this dispute which one needs to acknowledge, or for that matter even government needs to acknowledge, is that how the industry moves is, if you see manufacturer, importer, might be selling to distributor, then they might be selling to retailer, and then they might be selling to end customer. So if you see under excise, or for that matter before GST implementation, whatever dispute was there, that was only up to the manufacturer or importer. It was not carried forward to distributor, retailer, or end customer, because in that context they were protected because it was a first levy dispute, the excise duty, and for that matter even CVD in that context, or BCD still remains to be a first levy. However, now if you see for GST disputes, it becomes applicable at all the levels. So let us say if for a product the taxpayer is charging 28% and department contains taxpayer is charging 18% and department contains 18%. There is a 10% difference, but that 10% difference would come for manufacturer also, for distributor also, for retailer also. So same dispute, same item, it would flow three ways. And if you see, even if the basic amount does not become a cost, the interest, the rates are so high these days that percentage would be very high. So now coming or giving you an explanation. So when we talk about these disputes, actually they increase multifold because of the decision of Westinghouse. But before we proceed to that, I'll just like to highlight what the provisions of law are vis-a-vis the classification of parts and accessories of motor vehicle or railways. So parts and accessories of railways or automobile, they are covered under section 70. So we are referring to notes of section 70. In this regard, rule 1 of general interpretative notes is very important. This states that titles are for ease of reference. This part is important. It says classification shall be determined as per heading, section and chapter notes. So these GIRs give a legal validity or a legal sanctity that whatever has been written in the section note, chapter notes, that would prevail. So and they say that GIR is to be followed only when chapter note and section note are silent. Now let us say what the section note of section 17 says. It's the note 2 says that the expression parts and accessories do not apply to the following articles. So multiple articles have been given. If you read this note, this clearly says that it would not apply, or let us say if parts and accessories of motor vehicle or parts and accessories of railways, they would not apply to these articles. So if let us say there is an article of chapter 90, it would remain to be covered under chapter 90 and would not be covered as part and accessories of these particular products. Then there is a note 3 which says that let us say if it is not covered under this product. So it says the part and accessories do not apply to parts not suitable for use of these headings. So in short, they are saying that even if let us say you have to cover something as part and accessory, it should not be a general item. It should be a specific item. So take an example, let us say it's a screw. So you have screws, there are very, I'll say industry standard screws, 3-4 inches screws, or let us say 1 inch screw is there. You can go to any, I'll say, shop which sells hardware items, and any hardware shop, and you ask for a 1 inch screw and they will be providing you that screw. So in that context, even if that screw is used in motor vehicles, because it is not suitable for use solely or principally with these headings, it would not be covered as parts and accessories. So this is an independent note which was there independent to note 2. Now, what did Westinghouse say? Westinghouse was dealing with classification of relays which were meant to be used solely in railways. So there was a specific design that it can be used only in railways. So there was a dispute whether it would be covered under 8608 as parts and accessories of railways or 8536 as parts and accessories of relays. What Westinghouse said was, they said that GIR would not be applicable. That they rightly said, because section notes and chapter notes are specific, that would be applicable. But they relied on note 3 and said that if a part is specific for a particular chapter, note 3 would apply, and note 2 would only apply wherein parts are not specific. So in this case, they said because relay is specifically designed for for railways, it would be covered by note 3, and even though chapter 85 is excluded by note 2 would not apply in this case. I'll just move back a bit for you guys to absorb this. What this the Supreme, and mind you, Westinghouse was a Supreme Court larger bench decision. They said that because note 3 says that if it is suitable for use principally and solely for a particular part, so any item, whenever it is principal or suitable for use for railways or automobiles, it would remain classified with that. They basically went in a concept known as group classification, and they said this note 2 would only apply for generic items. What this did was actually in effect it made note 2 redundant. Why so? Why I'm saying that? Because if, let us say, a particular item is not meant solely and principally for use, because of note 3 it cannot be covered under this heading. So note 2 cannot exclude something which is already excluded by this note. What should have happened is, there are, let us say, a particular X part. If it is excluded by note 2 or note 3, any one of the exclusions should take it out. However, this said that if it is excluded by note 2, then you check note 3, then you check note 2. So in that context, the ruling was incorrect. It made note 2 redundant. And in that context, it actually made a buzz in the entire industry of automobile and railways, disputing for, I'll say, a trend of judgments which are there, which laid a different heading. In this regard, they actually did not consider the HSN explanatory notes. What do these explanatory notes state? Explanatory notes stated that 3 conditions are there for classification of parts and accessories, which need to be which needs to be satisfied cumulatively. First is, it should not be excluded by note 2. Second, it should be meant solely or principally for use of these articles. That is, if you see note 3. And third, it must not specifically be included elsewhere. I'll come to this condition C in a minute, but if you see these 2 conditions, firstly, the court only considered these 2 conditions, and they did not say that these conditions are to be satisfied cumulatively. They said you applied condition B. If that is satisfied, even if condition A is not satisfied, it would remain classified here. That was a gap which was there in the reasoning of Supreme Court, which quite frankly was not even presented to the Supreme Court, these HSN explanatory notes. An additional condition which the explanatory notes provide is that they must not specifically included elsewhere by nomenclature. And I'll be getting, this is also a very important condition which is there in law, which I'll be getting how we can use this condition. But before that, I'll just like to highlight that is HSN system. This actually is based upon an international system, and there are several Supreme Court judgments. So, which, whether in context of these parts and accessories of motor vehicle or even otherwise, they have been consistently stating that these explanatory notes are actually binding on the for interpretation of law. Surprisingly, and because there was so much, I'll say, dispute in the industry vis-a-vis after this Westinghouse decision, what happened was department issued an instruction. Department's instruction stated that, number 1, Westinghouse ruling is fact specific and cannot be generalized. In effect, they stated that whatever has been the principles what have been stated in the Westinghouse ruling, you do not apply it to all other cases. Second, it stated that it would be only applicable to relays, that is goods of 86 railway parts, and not to parts of chapter 87 which are automobile parts. Then they gave another argument which was not entirely correct, but the instruction stated that this instruction or the decision was pronounced in context of excise tariff act before 1994. So if you see after 1994, these custom excise tariff act and central excise tariff act and custom tariff act, they were aligned. So an artificial distinction was created that because it was for 1994, they were not aligned, so you cannot apply it for customs law. And GST tariff at least is based on customs tariff and not on excise tariff. Then they said that you should, whenever you are classifying, you take into consideration all the judgments which are there and you go for fact specific. In so many words, the department said that the instruction, in fact, during the instruction, it also referred to the rulings. It referred to the 3-layer test which we discussed in the last slide. It said that that was not considered. It has been considered in several other Supreme Court judgments, and therefore it stated that, in so many words, it stated that Westinghouse, okay, for relays we can't do anything. It is already pronounced. For any other parts, we will not apply that. And just to share with everyone that what had happened after Westinghouse was that many of the companies, specifically for imports, some customs house actually had an internal instruction stating that you have to apply Westinghouse, you can't do away with that. So in that context, this Westinghouse was creating a problem for automobile players. So now moving forward, I'd also like to just briefly discuss the jurisprudence on classification. So because why we are discussing that is, if you see in the last point in the instruction, the instruction specifically stated that you have to consider individual cases also. So after Westinghouse, a relevant question is whether all other automobile parts, am I safe? So in all the cases, let us say there will be no dispute or there can be any dispute. And answer to this lies in two parts. One, of course, in interpretation of law, and then on the past jurisprudence. So before Westinghouse, there were many rulings which were there for automobile or parts, similar parts, which in specific cases, this gave specific understanding. So like for seat parts, there's a ruling of Cherokee Auto, Supreme Court. This decision came after Westinghouse. In this case, the contesting entries were 8708, parts and accessories of motor vehicles, or 9401, which covers seat and parts. And for this, the session said that seat parts would be specifically covered by nomenclature, and therefore they would be excluded by Note 2. If you consider here, if you recall this covered by nomenclature, this thing was specifically discussed as a condition C in HSN explanatory notes, and that is where the linkage comes from. And Supreme Court actually dismissed the appeal filed by Revenue. They did not discuss Westinghouse. But if you see the relevant jurisprudence of this product, then because of this judgment, one can contend that 9401 would apply. 8708 would not apply, even though seat parts or seats are specifically meant for motor vehicles. This was a positive judgment, but there have been negative judgments as well for parts and accessories of our automobile. So for fasteners, so it's a product which is very similar to screws. For this, there was a decision of GS Auto on Supreme Court. Therein, they were discussing, they relied on Note 3, and Note 3 that is specifically meant. So they said wherever a part and accessory specific for motor vehicle, it would, fasteners specifically, they will be covered under 8708 only, and they cannot be covered under 7380. Now, a very important part here is a point to note that 7318 covers fasteners by name. So this test of nomenclature, it was not taken before GS Auto in that judgment. And therefore, just like Westinghouse, this is also another ruling which I'll say is not, which can be countered basis the 3-layer test which was there. This judgment too was in context of excise before 1994. So the basis or the grounds on which the department was trying to distinguish or dispute the judgment, this judgment can also be disputed. Similar issue came for emblems. So in the Pragati Silicon judgment, the department had held that, the Supreme Court had held that the emblems, that is, if you must have seen in your cars or let us say even in the bikes, there are some plastic items which represent the logo. So let us say you have a Maruti Suzuki car, so S symbol would be there. Or let us say if you have a Honda motorcycle, then H Honda symbol would be there, which would be a plastic coated part, plastic coated silver part. So that they said would be classified under 8708. And there again they missed the fact that number one, it is excluded by note 2. Secondly, it is covered by nomenclature under this heading of 3926. So in that context, I'll say this part also to some extent is the judgment did not consider this 3-layer test. Moving forward, another judgment, negative judgment on instrument clusters of Premier Auto. Therein also they were contesting different entries and they held that it would be classified under 8708. And lastly, for electronic control units or electronic automatic regulators, they were discussing whether it would be covered under 8543 or 9032. And Supreme Court said that it would be covered under 9032. Now, why are we discussing these judgments? Because number one, even after Westinghouse, one needs to see what these judgments state, whether these judgments, if they are negative. So if you see instrument clusters, it's negative. If you see fasteners, it's negative. Emblems, it's negative. They have been saying under 8708. So even after implementation of GST, while Westinghouse judgment has been effectively nullified by instruction, these judgments remain, and you can expect department to be litigating on these parts, on these judgments. The second point is that even though these judgments remain, whatever arguments were placed by department in the instruction that they did not consider the 3-layer test, that this was before 1994 where the tariffs were not aligned, that arguments would remain for these judgments, and taxpayers can consider distinguishing these judgments basis the instruction itself of Westinghouse. But again, the classification, be it of automobile parts or otherwise, becomes a very, very tricky part. You need to see, number one, you need to see the HSN notes, section notes, chapter notes, competing entries, and then HSN explanatory notes. Considering all this, you need to find on a different classification. As long as the rates are not different, the department may not dispute. But wherever there is an arbitrage, like we discussed initially, arbitrage for automobile parts and other parts, wherever there is a similar arbitrage, the department is expected to dispute. So this is our slides on the on the rate changes and the automobile part disputes. Now we'll be happy to take any questions which the participants may have. If you have any questions, you can write on the chat box and we'll be able to see that and we'll be able to answer. Can you see any question from participant side? Okay, so I can see one question. I'll be responding to that one question, and then if any question comes in meanwhile, I'll be responding to that also. So one question which has come is that if, let us say, the department is disputing on classification and parts and accessories, and let us say the supplies is to a B2B customer. So let us say if a part manufacturer is there and it is supplying to an OE, whether for differential rate, whether debit notes can be issued, and if issued, whether an ITC would be eligible to the recipient or not. So there are two parts of this. I'll firstly be replying to the legal part, and then I'll be coming over to the practical part of it. Firstly, responding to the legal parts, debit note can be issued. Yes, they can be issued. Whether ITC can be eligible to the recipient. So many of you might note that recently an amendment was done, wherein they allowed, even after time limit, they allowed ITC after September also. They allowed ITC in that context also. So if you consider that amendment, yes, you can issue debit notes. The recipient would be eligible for ITC. But however, the interest dispute may continue. So some taxpayers, what they are planning is they're discussing that they might issue these debit notes under protest so that the ITC chain gets protected. And if, let us say, a legal dispute is there, that may continue. Now comes the second dispute vis-a-vis the practical part of it. The practical part of it is that, let us say, while issuing a debit note, you do need a consensus of your recipient. So you may think that yes, I can issue a debit note, but until and unless the recipient wishes agrees that he would be taking the credit or he would be paying that amount of GST, that cannot be issued. A second point why the industry is very reluctant for this debit note is, even these OEs, they have a spare part division wherein a substantial quantum of these parts are then sold in the spare part market. So if, as we discussed in the slides above, it is not a single part that when a manufacturing is supplied to an OE that the chain or the dispute would end there. If an OE is also supplying in through its spare SPD market, those disputes should also be continuing therein, and accordingly, that is why OEs, or let us say any of the recipient, they are quite hesitant in accepting it, because sooner or later the dispute would also come at their level, and from there at dealers level, and so on. So it would not be a single level dispute of the part manufacturer. It would be a three-tier dispute from part manufacturer to SPD, OE SPD to the dealers, and therefore this would be relevant. Another question of these rate changes, when till when would they be applicable? So they would be applicable till different times. So they would be some of them would be applicable from 1st April 22, some from 1st April 23. For these changes which I highlighted from 1st May 22, most of them are actually rate changes. They are, I'll say, allocation changes only. There are no real rate changes in that context. So in that context, the changes are mostly that they are shifting it from exemption notification to tariff, which I'll say is a positive move from the government side, that they are making it easy for any taxpayer to understand what to understand or check the rates. Therefore, from the tariff itself, that would be available. Because till now, what used to happen is, let us say tariff prescribes a rate of 10%. Then you go to a notification, you see the notification has a rate of 5%. And quite frankly, some of the importers, they do miss going to the notification and seeing the effective rates. So in that context, this is a positive move from the government side, that bringing all these changes in tariff. Therefore, specifically for unconditional notification. So therefore, there are no disputes which the taxpayers may have in this regard. So these were the questions which are there. Any further questions, you may send through chat box. So these were the questions. So I'll now like to invite Taxmann team to say the parting words.
Hello.
Yeah, hi ma'am.
Hi. Thank you, sir. Thank you for this insightful presentation. I think this is over from your side.
Yes,
So this is definitely added to our knowledge on this topic.
Thank you.
We appreciate the subject matter, and thank you for precisely explaining it to our audience. I also thank the participants for being so cooperative. Thank you all for taking time out of your busy schedule and joining us in the session to make it a success. Though Sir has tried to reply to the queries raised during the session, yet in case you have any questions, you may please send us them in writing at sales@taxmann.com. Thank you all once again. We shall soon be back with another vital topic. Till then, stay safe, stay healthy, and have a great time. Bye-bye.
Thank you. Bye.
Send us them in writing at sales@taxmann.com. Thank you all once again. We shall soon be back with another vital topic. Till then, stay safe, stay healthy, and have a great time. Bye-bye.